is very important, and I wish all of you to be attentive. Number two, anytime you have any confusion, note somewhere. Don't sit merely to listen this class. Sit along with the notebook. When I go on talking about anything, you may get a doubt about, you wanted clarification. Immediately you note it. Something which I am telling, it is updated thing, make a note of that. You can make a note of that. But don't sit merely to listen this paper, this understanding, this subject. You cannot capture merely by listening. Your efforts are very much required because contents are very wide. So many things in one day I'll be telling you. So at least 20-25 new things, 20-25 aspects you cannot afterwards recollect. Therefore, better to have a structured way of noting somewhere, and based on that you can prepare further. So okay, so let us begin after understanding the importance. Now, what is that covered in Module C? Module C has got almost 9 units. Out of the 9 units, there are 2 units are interconnected. 2 units are interconnected. Here, banking law, Reserve Bank of India, this unit, development financial institution unit is connected with financial system regulators too. So 22, 23, 27, you can read in connect. Thereafter, 20 number unit is about very general basic Indian financial system overview. 21 is Indian banking structure as on today. And then 22 is banking law, that is RBI Act and BR Act, important provisions. Then 23 is development financial institutions. 24 is microfinance institutions. 25 is non-banking finance companies. 26 is insurance companies. 27 is a regulator part, and 28 is recent developments in banking, reforms in banking. So this is what is covered. So today our target is to cover at least 2 units. Please understand, we have got total 8 sessions, actually 7 sessions only. Within 7 sessions we need to conclude the not only module C, module D also. Module D has got 16 units. How many units? 16 units. And those 16 plus these 9, total 25 units. And for that we have got at our disposal hardly 7 days. So on an average, every day, unless and until you conclude with 3 units, it's very difficult to go ahead. Okay. So keeping in view that, I will be rushing through very fast. My speed will be a little bit high. In case you find that you can't catch with my speed, let me know. But if you are comfortable with the speed, the pace with which I'll be moving, absolutely no problem. I think we can cover the things. That confidence I have got, we can definitely cover. It's so required, then we may add one session. Okay. In the unit number 20, the overall we will be discussing about the Indian financial system, then how the development happened in the financial system, and the present banking structure, reforms and development. That is what is put together. 2021 unit we will be covering, and most of the things may be known to you. Therefore, I will not spend much time on making you understand the basics unless and until you are so keen to learn that. Okay, otherwise, that's this. For example, what is the fun in talking about financial system to a banker? But still, as a matter of examination point of view, if at all there is a question comes, which one of the following properly defines the Indian financial system, you should be knowing that financial system is nothing but an overall system which facilitates, which enables, which makes it possible mobilization of capital for the purpose of either investment or consumption. See, people have got surplus money. When that money they wanted to root, somewhere they wanted to save. So institutions are required to collect that. And after collecting that, institution will pass on that money to the people who are in need of it. And that need may be for investment, that need may be for consumption. So this is what is a key understanding about the definition. And then you can see here, there are savers. These savers will put the money into the financial intermediaries, and these financial intermediaries will give money to the firms for the purpose of their requirement. And these firms may be in need of money either in the form of loan or in the form of capital. Either way, this money will be made available to the firms so that they can do the business, and the things they can give the returns to the people who are investing it. This entire system in our country is of two types: formal system, informal system. Formal system only is discussed in this class. Informal system in the form of, see, at a village level, there are landlords are there. At village level, there are kirana shops are there, or shopkeepers are there. What happens? No, the farmers and the poor people, when they get some money, or they after selling their harvest, when they get money, that money temporarily they may keep parked with the money lenders. In the same way, whenever they are in need of some kind of borrowing, they may depend on those money lenders. And that's the way that system also parallelly works. We can call it as informal system. It is absolutely unregulated. There is no regulation. It's only on the trust the things work. Whereas formal system, it works in a very organized manner, very well regulated manner. There are institutions are there, regulators are there. Okay, and how to manage the institutional health guidelines are there. So all those aspects are there in a formal system. Now, here we will be talking in this entire session about this. My idea of showing this presentation copy to you is overall coverage you can capture now itself. Indian financial system, formal, organized system. It includes the regulators. RBI is there, Ministry of Finance, SEBI, IRDAI, okay, PFRDA, etc., etc. RBI, SEBI, IRDI, PF. Now, when I'm writing here 1935, 1992, 2000, 2003, 1982, 1988, there is a meaning. It is not that merely for the purpose, my thing I have written. No, exam point of view, these are very important. RBI established on 1st April 1935. SEBI started in 1992. IRDA started 2000. PFRDA in 2003. NABARD in 1982. National Housing Bank in 1988. IBBI in 2016. And they are in one or other way, they were, or they had, or they are performing a role of regulating part of the financial institutions. With that idea, they are being listed here under. Okay. Now, similarly, you can see here the financial institutions. Financial institutions includes bank, non-banking finance company, microfinance institutions, insurance companies, mutual fund companies. All these are the institutions. They are the intermediaries who collect, who gather the money from the savers and pass on to the people who are in need of it. Okay, maybe for business purpose, maybe for people like you and me. We take the loan for the purpose of buying a TV, or constructing a house. Okay, so that's the way. Needs of the people are different, and accordingly, the institutions make it possible to available funds to those people. Okay, then when institutions are there are different type of institutions. Some institutions are deposit mobilizing institutions, whereas some institutions are loan giving institutions. And therefore, when the fund mobilizing institution like mutual fund, mobilizing institution like insurance company, where premium is getting collected, now ultimately that fund somewhere that need to be parked, and to get it parked in a very systematic manner, there must be a mechanism to borrow the money, lend the money. And that borrowing money, lending money, in inter-institutional borrowings, for that there is a possibility of market. There is a requirement of market. The markets are money market, capital market, derivative market, forex market, debt market, blah. These are all the financial markets. And then in these financial institutions and market, different instruments are used. Maybe you can say the deposit is an instrument, deposit receipt, equity share is an instrument, debenture is an instrument, bond is an instrument. So all these are financial instruments, and multiple type of services are required to operate all these things. Those institutions like CGTMSE is there, so DICGC is there. Okay, payment advisories are there, then credit rating institutions are there, credit information companies are there. So like that, multiple institutions are there which supplement the efforts of this entire financial system, and they are very much required too. They are very much required too. So all these put together, it makes the financial system. And during this module C and D, we will be almost touching upon all these aspects in detail. In detail, in a nutshell, I had discussed with you what is the coverage under this subject. And you can see here down below, I have written bank institutions, commercial, cooperative bank, developmental financial institutions, microfinance institution, non-banking finance company, insurance company, mutual fund company, pension funds. All these are the institutions. Okay. Now, as far as informal concern, money lenders are there, local bankers are there, traders are there, landlords are there, chit funds are there. So these are all the non-institutional activity are also operates in our country. I'll just reduce little bit, but if I go too slow, very difficult for me to cover the entire. Now you can understand the coverage gamut, coverage dimension. Okay, so all these aspects in at least on everything, if you learn 3, 3, 4 points also, that is what is very much required for exam. Now you just understand the what you can say, the gamut of the total subject. Okay, so therefore very important subject, and very much required too. Okay, so as far as financial system, I already told you. Then if further to that, money market is there. Under that money market, what will be capital market, what will be that part we will discuss in module D part when we enter. And now just what I'm just moving further. Okay, I don't want to discuss also, but something like financial instruments. When we talk about the instruments, see, money market, money is collected or gathered by the government of India. And government of India collects on that money. The facilitation is done by RBI. And through RBI, when money is collected, that may be in the form of bonds, or that may be in the form of treasury bills. Now, treasury bills, commercial paper, certificate of deposit, and the few sovereign gold bond, like these bonds, all these are the financial instruments which are taking part in the money market. Similarly, in the long term capital market, there is a share. Equity shares are there. Then preference shares are there. Bonds are there. Debentures are there. Okay, and that's a long term market. Then there is a possibility of hybrid market. Hybrid instruments are the bonds which are convertible into share, the preference shares which are surely getting the certainty of dividend. As at the same time, the preference shares are possibility is that they may be redeemable preference shares. Okay, so means on one side it works as a debt instrument, another side it works as an equity instrument. So these are all the aspects which are there in the financial. In addition to that, derivatives are there, future, option, swap, okay, interest rate swap, currency swap. So all these are the financial instruments, and we'll be learning about them. It is not that I'm just talking and leaving. We'll be learning about most of these instruments in detail. Okay. So financial services part, you can see fund transfer and settlement. So there are multiple institutions which are participating in money transfer facility. So today, if you talk about the payment system, there is a physical part of the payment system. I think long back, means slowly people are forgetting. Check is almost is losing its relevance. Larger transactions now, almost UPI. I think what is that revolution UPI has made. It's marvelous. Okay, NEFT, RTGS, when they are taking place, the relevance of check is slowly going out. Okay, credit information companies are there. Okay, that CIBIL is one such company. About all these things, we will be learning in detail. I have just what my point of giving to this to you is, showing this to you is, have a understanding what is the subject. What is the subject? And whether we have covered it or not, when at the end of the total module C and module D, you should be in a position to make a tick. Yes, this also discussed, this also discussed. Here are few aspects like that. Okay. So credit information companies are, I think, CIBIL like. There are 4 companies operating in a country. The rules relating to that we will be discussing. Then multiple self-regulating organizations are there. I think all of you are aware about IBA. IBA, what it does, it is an association of bankers. FEDI, what is the FEDI? FEDI is an association of the authorized dealers, authorized persons who are working, who are operating in forex market. Okay, like this, FIMDA is there. Okay, like this, there are multiple self-regulatory organizations are there, and those are all part of which are providing some supplementary support to these institutions to operate. Okay. Then merchant banking activity, wealth management activity. Okay. So all these are financial services. And regulators part, I think you can see here, RBI, it is a big regulator. Banks, non-banking finance company, core investment companies, monetary system, payment system, foreign exchange. Okay. Okay. Then SEBI, stock exchange, equity, bond issuers, intermediaries. Oh, okay. Then IRDI, insurance companies, insurance intermediaries, PFRDA, new pension scheme, Atal Pension Yojana, the pension funds which are operating in this area. Okay, custodians and record keeping agencies, all are there, and we'll be discussing about them. IBBI, Insolvency and Bankruptcy Board of India, though it is a regulator, it is not a part under this subject, but you will be getting idea about that in Principles and Practice of Banking module B. Module B, you will be getting about that. Okay. ROC, Registrar of Company, you will be getting understanding about ROC in Principles and Practice of Banking module A, where companies as an organization, how they are established, what public limited company means, all that. And there you get understanding about ROC. Okay. So please understand the dimension of this subject. Okay. Hope now bit speed is reduced, or still you want me to reduce further? Now we are going in a very perfect manner. Number one, see, support organizations in financial system. This is the latest information. Please make a note. There is a Indian Banks Digital Infrastructure Company. This institution is created by commercial banks. And what it is doing, it is revolutionizing the banking and finance, and as well as banking and financial system, as well as the insurance industry through a public digital infrastructure. So this is, make a note, IBDIC, Indian Banks Digital Infrastructure Company. It is what it is doing. It has created a public digital infrastructure so that all these banking and financial services, they can be made available digitally. Okay, without much botheration. Digital things need to be aware. So therefore, appropriate infra is required to be created. Here is another thing, exam point of view, very important. That is Financial Services Institutional Bureau. Financial Services Institutions Bureau. This is created by replacing Banks Board Bureau. Earlier it was Banks Board Bureau, which was interviewing, identifying and selecting people as a whole-time director or chairman of the bank. Okay, executive director of the bank. That position people, recruitment part or selection part is being done by Banks Board Bureau. That entire job is now being taken over by Financial Services Institution Bureau. Okay, Financial Services Institutions Bureau. This has started its functioning from 1st July 2022 onwards. Okay, so 22 onwards, and that there is a Secretariat Bureau which has got a secretary as a key person and 5 other members are there. Okay, this is what a brief knowledge about that. Keep a note of that. Additional thing, I think you can Google it. You can do chat, whatever, but now I think now onwards you will be making use of mobile phone for additional information. Whenever I'm telling on FSIB, additional information you can gather exam point of view, very important thing. This is another thing, that is FIMDA. Every time exam question came, FIMDA's expansion, that is very important. Fixed income money market and derivative association of India. So it is an association of whom? It is a scheduled commercial bank, public financial institutions, primary dealers, insurance companies. Primarily, these institutions which are taking part in fixed income money market, derivative market, fixed income money market and derivative market, whichever entity is participating, the association of them is FIMDA. Association of them is FIMDA. And the normally who are all the participants? The scheduled commercial bank, public financial institutions, primary dealers and insurance companies are the participating people in money market, fixed income money market and derivative market. Okay. Indian Banks Association, I think all of you are aware because you are wage settlement. Okay, that's why you remember the Indian Banks Association. But Indian Bank Association is an association which actually proactively working for growth of healthy and professional banking in India. Okay, so these are the few aspects. You please make a note, exam point of view, very, very important. Okay, so next, as far as cooperative movement concern in India, cooperative banking is actually a very old banking in a country. Okay, very old. But now it has taken a proper shape because Reserve Bank of India Reserve Bank of India has brought the cooperative banks are also under the umbrella of RBI for the purpose of regulation. Okay, state government, they may have their own regulation, but financial functioning purpose, financial parameter purpose, the financial strength purpose, because ultimately financial stability of the country is the key role of the FSDC. Okay, Financial Stability and Development Council, where RBI chairman is one of the member. So he therefore RBI has brought cooperative banks under the umbrella for regulation, and from then onwards, I think you can see there is an organization which is created, okay, for National Urban Cooperative Finance and Development Corporation. Okay, so created, and it is an association of urban cooperative banks, and all cooperatives and association is there. National Federation of Urban Cooperative Banks and Credit Societies. All. Okay, so this has got established in 17th February 1977 as a multi-state cooperative society. Okay, and more than 50,000 plus cooperative credit societies are member of that. More than 1,600 urban cooperative banks are member of that. Okay, and in addition to that, this bank works as a promotional body. Okay, in the country. Okay, promotional body for cooperative banks, urban cooperative banks in the country. Okay, so NCDC is an organization which to assist the different types of cooperatives to expand its financial base. NCDC is now be able to finance the project in rural industrial cooperative sector. Okay, these three aspects are key aspects on this slide. Make a note of that. Number one, NCDC. Number two, National Urban Cooperative Finance and Development Corporation. And number three, the National Federation of Urban Cooperative Banks and Credit Societies. These three key aspects relating to cooperative bank, make a note of them, and only expansion part, don't need a further knowledge about that unnecessary. But if you gathers from somewhere updated information somewhere, absolutely you are most welcome. For all these purposes, the correct data you will get only from website of respective organization. Don't rely upon any information which is available through either ChatGPT or the Google. Don't go with Google. Don't go with the chat GPT. If at all you want the perfect information, you visit the respective website of the particular association, and then you get the correct information, latest information about those organizations in perfect. Okay, in otherwise you will get in difficulty. Okay, so now down below there is another word written that is also very important for exam. That is one Harbinger 2025. Something is written. Are you able to see that? Are you able to see that? Here you can see. Harbinger. What is this Harbinger 2025? Harbinger 2025 is nothing but it's a activity undertaken by Reserve Bank of India for encouraging the startups, encouraging the fintech companies, encouraging the new ideas which can create an innovation in banking and finance sector. Banking and finance sector. And RBI every year they have conducted. Now last year it got conducted RBI to 2025, and the 2025's theme was the digital transformation, fintech collaboration, regulatory framework, and consumer protection and financial stability. And fifth objective was data analysis and cyber security. I'm sure that data analysis and cyber security you get knowledge in the module C of principles and practice of banking. Okay. And consumer protection and financial stability. Absolutely, I think you all will agree in banking. This digital transformation, fintech collaboration is happening. What is a fintech? The company which is offering financial services in an effective manner by utilizing the technology. They are not the banks. They are not the banks. What they are? They are the technology companies. They are the technology companies. And that technology company, what they are doing? The part of the service which you are supposed to offer, that service which is not directly borrowing money and lending money, but they are facilitating. For example, Cred is one company which is a fintech company. What it is doing? Bank Bazaar is a fintech company. What it is doing? So you can see there when you go to the Bank Bazaar, you will find all the home loans of all the banks in a comparative manner that they are provided. And any specific feature of any bank's loan product that is being made available there in comparison, so that people can take an informed decision. So that kind of thing they are making it through the technology. Cred, I think some of you may be using that Cred, where you can have all that credit card related data. Now you may be having 5 banks credit cards, all the banks credit card outstandings, your transactions you can have in single app. That is the Cred. So now all these are the fintech companies. Okay. Now the theme of our Harbinger 2025 was secure banking powered by identity, integrity, and inclusivity. Identity, integrity, inclusivity. So problem statement were identified for the purpose KYC, CBDC, okay, and enhancing trust. These 3 problem statements to address the innovative ideas the people were to suggest. So prices are yet to be declared. I have not seen the prices declared, but this is what is a knowledge. It may help you because Harbinger 2025 question may come. Okay, somewhere you will get a question. Okay,